The market will find ways to screw you and take your money and do the thing that you're least expecting and make it tough to hang on. One of my favorite traders is Mark Fisher, and he always says, if it's obvious, it's obviously wrong. I tend to agree with him. I hate this kind of idea that people, they have these grandiose macro plans or theories, and they think that it's all like set in stone. It has to occur this way because of this and this and this. And I always say that making money in this business is not hard. Keeping it is extremely difficult. Like, it's so hard, right? Like, making money, any fool can make money. And like, that's what's happening now.
I think, well, the currency fear, the fear that, oh my God, if we start spending the Canadian dollar, which already is at 50 cents, we'll go like 25 cents. And our purchasing power will be nothing.
But I think now we're faced with given what's going on with Trump, the rest of the world is spending. So yes. I think so. One of the things that I know this is supposed to be about trading processes and stuff, but something to think about is that the world has been starved of spending, except for the U.S., and that is why we have had so much growth. Now, with the moves that Trump has made, a lot of the rest of the world has been forced to spend more. Just look at Canada. I'm a Canadian. We are having to rearrange our economy. We are forced to go and do things because we can't rely on our past relationship with America. And so what we're experiencing now is we're going to go from 2% deficits to 5%. Right. And now all of a sudden there's going to be competition for that capital. Correct. And we're going to see it change.
Right.
And I'm actually really worried about the bond market in the U.S. And I'm worried that there's going to be a disaster there. And I think people are being complacent. Like, put me in the Jamie Dimon camp. If this continues, then there is going to be, you guys are running 7% deficits with no recession and no war. Right. Like, that is crazy. That is just crazy. Like, it is nuts. And not only that, it looks like it's going to go up. So anyways, we kind of got off track there.
No. To that, because it does come down to trading process. Because what's interesting about that is if you sort of take your thesis to its natural conclusion, for the last 20 years, U.S. stocks have outperformed the rest of the world by, I don't know, a factor of 5 or whatever. I don't even know, a lot. So let's just say,
100%. Right? Yep.
That actually may call a completely like the whole idea was, you want to do index investing, invest with the index, and it was always just the U.S. index because that was the index that was constantly compounding.
Right.
I think maybe the next 10 years, the trade is going to be maybe a little more equal, but maybe completely reversed, where it's going to be the DAX and the Cap Canaveral and maybe even the Canadian and the TSC. That basically the rest of the world. Growth world, the industrialized world, may outperform U.S. as far as equity market goes, and especially if the U.S. bond market starts to falter. Now, the story with the U.S. bond market that everybody talked about with Ray Dalio, the idea that the moment you get to the point where interest rate called the service of the debt becomes the single biggest budget item, that's the danger point for every economy forward.
Okay. I'm going to address that because actually I think that's a good point where I can shed some light on my process in terms of understanding how I use macro and how I position and think about things. I worry about any of these hard and fast rules, like the Ray Dalio rule. Right. I worry about any time anyone tells me that the fourth turning means that this and this and this, or like if anyone is confident they know where it's going, I'm like, you're going to be wrong. Like they're like, it's never so clear. It's like, one of my favorite traders is Mark Fisher, the famed oil trader. And he always says, if it's obvious, it's obviously wrong. I tend to agree with them. And I worry whenever I see folks saying, the bond market's going to get in trouble because of this. And I would think about it like this. I would think the bond market might get in trouble. This is one of the signs that we are getting closer, and therefore I should expect surprises that way. But I hate this kind of idea that people, as they have these grandiose macro plans and or theories, and they think that it's all like set in stone. It has to occur this way because of this and this and this, and it's going to matter. Let's just imagine that Trump got sick and he couldn't be the president. Let's imagine he wasn't the president.
Right.
Then the macro environment would be completely different. There's a million things that are shaping our narrative as we go along this journey. And all you can really do is say, like, I believe that the risks are tilted this way. It would be like the casino that has an edge in blackjack saying, I know for sure that this client or this guy's going to lose on this next hand. Right. And I'm like, no, you don't. You know for sure that if this guy keeps playing at this game long enough, that he's going to lose, because unless he does something where he counts cards or whatever.
Drinks. That's why they give you the drinks. I always tell them that. Wow.
Yeah. And so it really kind of, it frustrates me, because I find folks really seem to have way too much certainty in this business. And I am certain about that. I believe that the risks are skewed certain ways, but I'm always thinking to myself, I could be wrong. I could be off in my timing. Like right now, I think the American economy is rolling over. I think that the U.S. stock market a year from now is going to be lower. But it was only a month ago or so, that I said, listen, we could get a rally. And I talked about the reasons we could get a rally. And I brought up the fact that in 2007, we had this situation where Jim Cramer did his famous rant. And I don't know if you remember it, Boris, but he did this rant where he was like, they know nothing. The Fed knows nothing. I'm like, the markets are collapsing, blah, blah, blah. And in my mind, that rant was always at the end of the bear market. It was always when it was so obvious.
Right.
And I was absolutely flabbergasted to go back and learn that he did that rant on the first 10% dip in early 2007.
Right.
And after that, the market went down 2 or 3%. And then that summer rallied to new highs before then collapsing. And he was spot on correct. Like, let's give him his dues. He was spot on correct, yet the market rallied to new highs. And so I just want everyone to remember that just because you think you got it and you've got it all figured out, and he had gotten it all figured out, the market will find ways to screw you and take your money and do the thing that you're least expecting and make it tough to hang on.
See, now, because I know you, and I know because I'm going to handicap you, and I know you're always early, this makes me feel like we're going new highs before. Like, in other words, it's just like there's like at least 6 more months of relatively good data before we start to really, really roll over. And
I'm open to it. I wrote that piece, Boris. I said, I'm open to new highs. I'm ready for them. I'm ready. I'm trying to learn for myself, and I'm trying to say, like, longer term, I'm confident over the year. I'm very unconfident over the next 1 month or 2 months.
I just remember how you were screaming inflation, inflation, inflation for about 18 months. And everybody was laughing at you. Everybody was laughing, and nobody. And it was just like it got tired. And then and then when they stopped laughing, it was like, oh my god, we broke the 3, and now we're like 8%. But it just that damn took a long time.
Yeah, it really did.
Yeah, it was. So I couldn't agree with you. So if you're, and I sort of very much share your point of view, which is that nobody knows that this is. I forget the famous. Screenwriter in Hollywood, he said nobody, William Goldberg
there was somebody. Yeah, I know what
he said nobody knows nothing. It was like, and I always thought that was a line that describes Wall Street to me just as easily as it describes Hollywood, that nobody knows nothing, and if you ever go back to even all the famous gurus on Wall Street, just I dare you, go to like Barron's two years beforehand and see what they said. We've been more right. It just like it's a fun exercise to do. But if you're sort of within that thing, how do you is it a matter of creating lots of different bets? Is it, how do you what do you create as your own trading process to appreciate the fact that, I have a view, but I could be very much wrong. How do I protect my capital and give it a chance to thrive within that framework?
So, I'm 54 years old, and I'm like, I say that all I bring to the party is 25 years of mistakes. I need to update that. It's probably closer to 35 years of mistakes now, but I'm still learning, Boris. I still make new mistakes, and it's difficult. And I struggle as well with this. And the reason I struggle with it is because I too get too convinced of of particular trades. And I would say the diversification amongst the trades is really important. And you need to be careful as a macro trader that they're not all the same trades. Like you're long US, long gold and then short US dollars. And they're not exactly the same trade, but you need to be aware that they're the same. So one of the things that I also think is interesting when I look over my history, if you had asked me to pick my trade that was going to make the most money each year, there's no way I would get it right. Like in advance, zero. Right. Like the one that I like the best is the one that inevitably I trade too big, I make a mess of, and that's not my one. It's something else. So one of the keys that I think is to make sure that you have not a lot, but enough different bets on that you can go and do it. The other thing that I struggle with.
What do you think would be like a reasonable number? 10 bets, 15 bets, 7 bets, and obviously, speaking of diversification, I still remember a customer one time came to me. He goes, I said, "You're not diversified." He goes, "What do you mean? I'm totally diversified. I'm long pound yen, I'm long CAD yen, I'm long euro yen, I'm long." I'm like, and I was just like, that was the funniest conversation I ever had. Yeah.
I remember there was a famous Canadian that said something like, "Of course I'm diversified. I'm short NASDAQ and long gold." It was like that kind of thing. Yeah. How many bets do I think would be normal? First of all, I think so everyone's different, and people say like, "Oh, why don't you tell me your positions?" And I said, because the problem is that everyone's risk tolerances are much different. And I know guys that'll have a 500 basis point day and it doesn't phase them. They'll be like, that's cost business, that's a lot. I know people that have a 50 basis point day and they're beside themselves.
They just spawn them. Yeah.
Right. So everyone's, and that's one of my problems is that I said, like, my risk tolerance is going to be different than yours. And chances are my risk tolerance is probably going to be higher than most. Like a lot of folks, if you're not a professional trader, chances are you're not viewing it the same way and you're not looking for 100% returns. So you're probably happy with 20, you beat the stock market or 20 with low sharp. And really when someone tells me they're up 50%, it never impresses me. I'm always like, okay, what what drawdowns did they do beforehand? It's like the dumbest thing in the world. And if there's one sure way for me to say you're not serious is for when you start telling me your returns and you don't give it in the context of this is what my volatility was supposed to be. This is my drawdown. Anyone can have a 50% up day. Or 50% up move or 100% up moves. And I always say that making money in this business is not hard. Keeping it is extremely difficult. It's so hard, right? Making money, any fool can make money. And that's what's happening now. There's guys that are saying they're
spectrum, whether you're day trading or whether you're position trading, it's keeping what you won over the last 4 hours is much harder than actually. Yeah.
So when you ask me how many bets, I don't think it needs to be 20, but it needs to be more than 10.
Yeah.
Yeah. That's.
And for you, I know one of the things we talked about before is that you really like the idea of expressing a lot of your opinions through options because they give you sort of asymmetric, payouts. Like a leap option is essentially a very, Nancy Pelosi, the world's greatest trader, is the master of the leap option. No, because I was going to say because obviously there is just so much upside potential with a fixed limited risk to the astronaut.
So it took me a long time to figure that out, and that is not something that I figured out till I was probably 50 years old. And it was one of the benefits of doing my podcast and talking to guys that were super rich. And I was, talking to them about their process. And I was shocked at the number of these fellows that would own 1 year, 2 year options and use that as a way to express their opinions. And I grew up, as I told you, as an index equity derivatives trader. Generally, index volatility trades higher than realized.
Right. So
given that we had a bank's balance sheet and that this was occurring, we were always short vol. And I went through long-term capital short vol. I've had some crazy time short vol. And
wait, you talking about that? When you say you want to larger capital, were you guys counterparties to
No, I just mean that when we had the spike in vol, we were short volatility because everyone was buying volatility. And we just, I remember selling. This is embarrassing.
You were like perfectly okay selling vol after long-term capital because you knew it was going to compress.
Well, we didn't know at the time, but I remember we were short going in, not huge. And we started selling it. Like back then, vol traded really cheap, and it was like we started selling 20s, which was kind of funny. We were like, "Wow, 20s! Like this is great. Let's sell some 20s." And next thing we know,
so it was like 40. I think. How high did it get?
Yeah, so we were doing Canada, so I'm not sure we went quite as high, but it did 40 or 50. It went up to that kind of number, and I remember selling vol and just doing every kind of 5 vol, we'd just be like, let's do more, sell more. And it wasn't like we were renegades, like yahoos. It just made sense for us to do it. We had the balance sheet. Eventually we were told when it got really spicy and they started to worry about the financial system, we got told we couldn't sell anymore. Yeah. But I do have a funny story about this, Barca. I remember being short volatility. So for those who don't know what that means, I'm short options and I'm delta hedging them. So as the stock goes, the index goes up, I need to chase it. And as the index goes down, I need to sell more. And I remember that I had all this short game on, and there was a big structured product out there that like 3 firms had sold against. It was like CIBC, Citibank, and BT Bankers. And these guys were all short vol, and they were always like bidding vol because they were always just perpetually short this monster position. And I remember I would trade the delta for the Citibank guy, and he phoned me up during one of the really illiquid periods when the market was just going down and nothing was happening. And that's the scariest points when the market's just melting and there's no trades going on.
It's okay when that's not bid, yeah.
And so he'd phone me up and he says, I need to sell like $10 million of index. Where do you bid me? And so like, I can't remember. I bid him like down, like whatever, like 0.5% or whatever, because the market's falling. So I bid him. I sell a tiny little bit. Let's say I sell 1 million or 2 million of his 10 million. I get the print up. Then I go look, and like R gamma is kicked in. And so now all of a sudden, instead of like I sold 2 million, I bought 10, I'm long 8, but the trouble is R gamma is like 3 or something. So now I'm long 11 and the market's lower. And then as the market goes lower, he phones me up another 20 minutes later, like asking me for another bid. And It was just this spiral. And I remember just like, holy shit, like nobody is like, there's nothing out here. And at one point we just, we stopped delta hedging because there was no liquidity. And we just said either the world's going to end or like whatever, like, that's that old saying that they, in front of the nuclear bomb, when there was the Cuban Missile Crisis, and it was a Friday afternoon and everyone was, all scared about the weekend. Right. And one of the traders was buying everything. And the young trader came to the old trader, says, why are you buying everything? He says, well, either there's going to be a nuclear war and it's not going to matter, or they're going to invert it and stocks are going to go back up. That's basically kind of how we felt like this is getting so bad, there's no point selling.
I kind of feel like, if you haven't been through a lot of market meltdowns like that, that's sort of like, there's always that moment where you sort of realize, either it goes to zero and it doesn't really matter, or it's going to bounce and there's just nothing to do but just wait and
Yeah.
and let
People, it's been a long time since COVID we had it. Like there was a point in COVID it was really scary. And there's like those moments where you just feel like the system is like losing it's not there. So I can't remember your question actually how we got on this, but in terms of the other traders, like we would. It was about option traders. I know what it was. Sorry. So the long and short of it is that I grew up always short volatility, and then when I was older and wiser, I started to realize the benefit of owning long dated options. Right. And I still to this day hate owning short dated options. It drives me nuts. It just never works for me. You got to be so right with your timing. It has to be perfect. It's not something for me. But after watching and talking to these really wise guys, I realized that it made a lot of sense to own long dated options where you have the benefit of time. You can let it work for you. You don't have the theta monster at your back doing things like that. So you're spot on correct that I've increasingly used options more in my book. And the other thing that's happened is when Trump came, I realized that there was going to be a wholesale change in the macro environment. I argued that we were about to experience the renaissance of macro trading, the likes we haven't seen since the 1980s when Michael Steinhardt, George Soros, and all those guys were there, because I do think that a lot of the imbalances that our economies have had are going to be changed. I don't know if fixed. Changed is the right word. And so you're going to see things like currencies move fast. You're going to see interest rates move harder. And so since then, I have increasingly used options as a way to express those views. And like, for example, I think long-term FX vol is just a screaming buy. Everyone is focused on the stock market or the bond market. The stock market always trades kind of fat with a lot of skew. Bond market is really high because of the 2022 problems, but FX vol hasn't really had its moment yet. And I think that it's going to come.
How would you, as a retail trader that you are now, sort of like, how do you express a long FX vol?
I just go do it on the CME. I'll just go buy like 6 months or 1 year things, and I make sure options. So when I have a view, I'll either just
or like the DXY or we just
so I just do individual currencies and then I might delta hedge them. I might trade around it, but on the whole, I just think that the surprises on FX vol will be to the positive, and I want to own these things.
Okay, so just to press you, which of the currencies you think is going to have?
Sure, yen's my favorite.
I was going to say,
yeah.
Do you think the yen is going to be the one that could explode?
Yeah. So I think yen is going to be the one. It's dirt cheap. I went to Japan. I was shocked at how cheap it was.
Oh, yeah. I watch YouTube videos, like where they go to all these little soup places. It's like $5 for lunch. I'm like,
yeah.
I'm like, because I'm still like old enough to remember when Japan in the 80s, when everybody in Japan was a millionaire, and it was like, dinner in Japan cost $1,000. And now, because they haven't had any price increases for 30 years, it costs $5. It's just incredible.
Yeah, there we go. I went to Japan with my family, and of course we got off the plane. We went to some place in Tokyo to eat, and I had a young, teenage son at the time. And although I still have him, he's now an older kind of young adult. But I remember we went to this place. We sat down in this fancy Tokyo restaurant, and he starts ordering like Wagyu steak. And I'm like, oh God, like this. Yeah, like this is going to cost me a fortune, because I'd heard these stories or whatever. The bill comes at the end, and I'm like, oh, it's $2,100. And I'm like, Jesus, like, I'm like, this is ridiculous. And I got the zero wrong. It's $210. And it's like, I fed 5 of us like kings. And like that thing in New York costs like $600 or whatever. Yeah. And it was shocking.
I'm just shocked that so that's interesting. Yeah, it could be a really interesting.
And then I love Brazil. I think Brazil currency, even the euro, I think you can own.
So many people. Let's just talk about Brazil because
Okay.
why? I know everybody likes Brazil because they think it has to catch up to Argentina, but that assumes that Lula is gone. If Lula stays in place, I think Brazil is a disaster economically. Why is everybody making that bet?
So I think that for a long time that was already priced in, first of all, right? Because now recently it's had a run, and I think that you have to kind of just step back and think about the bigger picture. To me, we're going into an environment where I think that we're going to have the world economic growth around everything else is going to increase. We're going to have commodities rallying around the US dollar going down. We're going to have things like oil doing better. All the things that Brazil should do better at is going to do well. It's also trades at a high real yield. And realistically, I almost would rather just play Brazilian interest rates, front-end interest rates. But unfortunately, I can't do it. For some reason, Interactive Brokers won't let us do it. And so
also BRL is controlled. There's a lot of capital control. On the real.
Listen, I'm with you. I just think it's got a lot of carry. And that's the one thing also I've learned is that over the years, I can't tell you the number of people that have sat there and said things like the Chinese renminbi back when everyone was bearish on it. And they would say, look, this thing's gone down for 10 years or whatever. And then you go do the real return, not the real return, the total return of owning the renminbi. And it would blow it away. And I remember my buddy Louis Vincent Gav, he would send me this chart of the renminbi when you're rolling the future or rolling the forward or whatever. And it was night and day in terms of what people thought that the renminbi had done. It was actually one of the best performing currencies out there when you took into account the total return. And it's one of my pet peeves is that everyone sits there, trades like the cash market, but they don't realize that's not their real cost. It's like the VIX. Somebody says, oh, I'm long the VIX and, I got this move. And the VIX always trades with a huge steep curve, or most of the time trades with a huge steep curve. So even when you get it right, you have to beat the forward return, not the cash. You can't look at the cash and tell me that you did better. You have to beat the forward return. Even things like interest rates, people will go and say, I bought the steepener, I made all sorts of money, but they don't realize, or they're not honest about the fact that sometimes the forward steepener trades at a point where it's already baked in. So we might have a situation where 210s are trading at 40 basis points, but if you go look, 6 months out, they're already at 70 basis points. So if you go long 210s, you actually have to beat 70. And this is one of my pet peeves is that a lot of people are missing. And back to Brazil, I think that there's a lot of carry there, and it really helps.
Yeah, nothing pays for life like carry, right? Because carry is. I mean, the idea of the whole thing is deserve the easiest, simplest, and most profitable trade in macro has always been carry. Just if you're in the right set of carry with just a little bit of leverage, you don't have to do anything else for the rest of your life. It's like being born rich and having your money work for you. What I was going to say to you is on the macro side, where do you think that the world goes over the next? You said that there's going to be a lot of changes. Does that mean you think there's going to be lots of adjustments that people are completely just taking for granted because they think the world is going to be the same today as it was yesterday in terms of economic issues? I mean, the things that we're going to be talking about, 6 months to 12 months forward, probably not going to be, Magnificent Seven or Trump, Musk flare-ups or anything else, right? What do you think will be the conversation?
So I think that Trump's economic policies are as monumental a change as when Paul Volcker came and broke the back of inflation in 1982 with higher interest rates. I think it's that important. And so if you think about what we've experienced for the last 40 years, and it's even longer than that when it comes to trade, we've had increasingly freer trade, and we've had a situation where all of the stimulus until 2020 was monetary. And this was ultimately, you mentioned how I was early on the inflation. I had always argued that inflation can always be created. And it's kind of quaint now, Boris, but people forget that there was folks that literally told us that we couldn't create inflation.
To interrupt you, to paraphrase Milton Friedman, inflation is and always a fiscal, not a monetary phenomenon. That's
right. That's right. And so I always told people, I go, yes, the things like debt and deflation because of technology and demographics, those things are going to affect inflation. Right. But to think that we can't create inflation is just naive. If the government wants to, they can always spend the money into existence. Right. And that has been the crux of my argument for a long, long time. And so that changed in 2020, and it really literally, and it proved to be one of the most important parts of getting the macro positioning correct. And I think I'm going to write a piece about this because I think it's interesting. It used to be that everyone would push back on that. They would argue with me, and they would say, no, that's not the case. And they would say that we're going to go back into disinflation and that this is the natural state of things. Now, all of a sudden, it seems to be that everyone's accepted that, and we're almost too accepting of government deficits.
Right.
And I think that the next big change will be all the things that the people that used to warn about deficits, about them crowding out the private sector, and about them creating inflation, they're going to come true. And it's at a point where we be kind of almost numb to it. Like, as I said, I'm just flabbergasted that the U.S. is running 7% deficit to GDP, looking like they're going to go to 8 in a time of non-war and non-recession. That is unheard of. And so I believe in MMT in terms of using it to describe how it affects how the economy works. And I know a lot of people disagree with that because they confuse the prescriptive part of MMT with the descriptive part about it. But the descriptive part works quite well. And if you listen to them, they say if a government spends too much or taxes too little, it's going to create inflation. And I think that's what's going to happen. We're going to create inflation. But you combine the government spending, and even more importantly, though, is the change in tariff policy. Right. If you go look at the tariff rate over like 100 years, it's like it went down. We kind of hit like a very low level in 1960 or whatever, and then we've almost gone to zero, right? Mm-hmm. But it's nobody alive today remembers an environment with tariffs.
Right.
We've spent our whole careers, Boris, living in a life of increased globalization and lower tariffs. Right. And now all of a sudden, overnight, it's been completely and utterly thrown out the window and changed. And I don't think the market appreciates how profound that is and what that means for the markets. And I might argue that globalization led to lower interest rates and lower inflation. Less globalization will lead to higher interest rates and higher inflation. And I suspect that as the economy has to rebalance, there will be all sorts of crazy things that happen. And that's why I think that you'll see currencies moving in big ways. I also think the world's become less stable from a geopolitical point of view. We had a situation where the U.S. was the world's cop, would go around and make sure everyone stayed in line. Right. I'm not as confident of that anymore. For example, here in Canada,
there's even an argument at this point. The U.S. is really is trying to remove itself from every conflict in the world, not just even the most obvious ones.
Right. Like in Canada, for example, I was always confident that if the Russia came and went to the Arctic and started claiming for themselves, you guys would go and, tell them what's up and we get them out of there. No. Now, all of a sudden, that's not the case. And so ultimately, we are looking at the world, and this is another reason why I think it's going to be inflationary. We're like, we can't rely on America to do that. And you could argue that we have not been shouldering our share of the cost of that. And that's completely a legitimate argument.
To your inflationary point, I mean, if Germany goes to 5% spend because they're gonna build tanks and missiles,
Yeah,
that's all inflationary. Again, with higher tariffs means that there's more constraints on the cost of goods, and there is this greater demand for the cost of goods, and kind of makes create a pretty strong formula for that.
So I think that we're going to look back, and here I'll paraphrase Byron Wien. Who was a great strategist, and they asked him once. They said, "Oh, Byron Wien, you were there in 1982 when the world changed and inflation was put to bed, and we went into an era of disinflation instead of inflation. What was that like?" And he said something to the effect of, the trouble about 1982 was you didn't realize it was 1982 until 1985. Meaning that it was like, while it was occurring, it was difficult to appreciate that that we were going to look back at the...
I mean, like, remember the great Business Week cover, The Death of Equities in 1979?
Yeah.
Like, the problem with 1979 is that you didn't realize you were in 1979, and you got loaded up the truck, you would have been bulky personally alive.
So I think that I really do believe that we're going to look back, and this will be I guess is it Jamie Dimon? Somebody's talking about the hinge moment of history. I can't remember who it is. Someone a prominent figure has lately been talking about the hinge moment of history. I believe we are in a hinge moment of history, and that macro trading will be very important, more so than we've experienced over the last couple of decades.
So my last macro question, which I just remembered, is we can't really leave macro. I mean, we've talked about U.S., but we can't really leave macro until we talk about the other elephant in the room, which is China, which is really, really interesting story, because what you see out of China is this incredibly disinflationary thread that keeps coming out. Their price levels actually keep dropping because, and I'm the first one to admit that there's an enormous amount of misinformation and propaganda and all sorts of conspiracy stuff. But there is relatively interesting arguments to be made that China actually may not have as much population as it claims it does, that its growth factors are not as robust as they seem, and that that the debt level within that society could be very depressive, not just for the society but for the rest of the world, in terms of dragging it down. How do you feel about that?
Okay, I'll take the other side of that one.
Okay.
As a true Chicago trader, I'll sell you that bid. So where I come down on that is that the implicit in your argument there is that they have no choice but to experience those things. Like, they can't control it.
Right.
And it sounds very similar to me to the times in the US before 2020, when people said we have no choice, there's going to be disinflation.
Right. So
so
as CCP, if they decide, listen, we need to unleash the dragon, we'll give everybody an apartment. We'll just give them their apartment.
Yeah, and listen, do they have imbalances when it comes to their housing? Yes, no doubt about it. Having said that, my buddy Louis Vincent Gav, I'm going to mention him again. He was on our show and he talked about, if you think about running a society for the young people, is having an increasingly more expensive real estate market that young people are it's terrible, right? Like, like that's the problem, is that young people in the West, and so what's happening is the reality is that the West, the older generation, is holding on to all the assets, all the wealth, and it's increasingly difficult for the young people to do well. And listen, I am no fan of China, so do not confuse me. Like, I understand their human rights, abuses. I am not defending them. What I am defending is the idea that they are somehow doomed. And that's in essence the argument, the Kyle Bass argument, that they're gonna implode from all these things like that. And I just ask people, like who has the capital? U.S. is the biggest importer of capital in the world, And I do think that needs to be rebalanced, and Trump is doing that. But the reality is that they're the ones that are borrowing every year from China. And so I'm not as concerned about China imploding because of these things, because I think the moment that Xi wants to, their economy can fly. And it's just a question of them doing well. In essence, I'm not as worried about the downside as most people are, because I think that the downside is actually easier to fix than folks realize. What I'm really worried about is governments that spend too much, and I'm worried about it when they get the inflation, because that's the really difficult thing to control. It's easy to fix your economy when it's suffering. You can go as a government that has fiat and issues. You just spend money into existence. It's much more difficult when you have a big debt and when you have a situation when inflation's running hot and things like that to fix that. And so I worry about the China doom argument, because I think it's too much based upon the old way of thinking about things. And I'd be much more worried about economies that are running hot and that are going to have inflation than I am about deflation, because I think deflation is a government choice and they can fix it whenever they want.
Well, Gav, we could talk for 3 hours, but the producers are yelling at me because we're so over time. Where can people find you? You write a really great newsletter.
Thank you very much. So go to themacrotourist.com and listen, you can send me an email, kevin@themacrotourist.com, and I'll be happy to send you some samples and hook you up.
And, he writes a great newsletter. He also has, of course, the Market Huddle podcast. We'll put both of those links in the comments. I really recommend you guys at least start your Kevin Muir addiction with a Market Huddle podcast, and then go on to the Macro Tourist.
Well, we got to get you back, Morris, to tell more stories like your dead body in the carpet story. And for those who don't know that story, go back and listen to the first time that Boris was on the show, and he told a terrific story about a dead body in the carpet.
I will say, last time I was on your show, because I'm sure I'll be wrong this time, but I like to at least I get to pat myself on the back, is when everybody was really, really down. This is post-COVID, and they thought, remember, 100% of all economists thought we're going to be in a depression.
Oh,
remember?
Yeah.
And I was like, not a chance. And, everybody was fighting me. And, I have to caught that one right. That made me feel really good.
Well done.
All right. Chief, it was great to see you. Thank you so much, guys. For the Trading Battle, this is Boris Schlossberg. Please, like the show. Come join us. Hit the subscribe button if you want to get some of this great content. And I wish you guys the best of luck in the markets. Boris Schlossberg, over and out.